So section A, first of all, then, we've got two questions in this section and you must answer both of them. So they are compulsory questions and each one is worth 25 marks. So the total for this section, as I've mentioned already, is half of the paper. So you need to get familiar with what sort of things that you're going to get in section A, because if you can't answer these two questions, you've already thrown half of your marks away. And remember, whatever you get on this written exam, 70% of your score will go towards your final mark, along with 30% of what you scored in your week 6 test that we did in class. So we're going to start with question 1. So if we have a look at what we've got to do first of all, so rather than sort of spending too much time reading the detail, let's go to the requirements. So we've got 3 things to do for our 25 marks. The first one, we need to work out our business property profit. Remember what I said to you about the dates? It is going to relate to last year because it's last year's exam, but the same rule applies. We want the figures that relate to the actual tax year. So 6th of April 18 to the 5th of April 19. So we want to know what income did I get and what expenses can I claim? And that's going to give us 9 marks. The second part, we're then going to use that information to work out Darren's tax liability for the year. So we're going to put the property income together with the other income that he's got. And then finally, a little bit of explanation describing the main consequences if Darren gave away this property to his daughter rather than selling it. All right, so most of the calculations form up the 25 marks. There's only 4 marks really for theory. So the main part of the question is about the property income, and that is then going to lead into this income tax liability. So you should be quite familiar with doing income tax comps now. This is all the stuff you were doing in chapter 2, I should say, and everything that we did in the week 6 assessment, but bringing in this property income that we did in chapter 3. So let's have a look at the property income first of all. So if we start at the top then, he lets out 3 different properties. So property number 1, it was let out at £900 a month throughout the year. So that's good because if it's throughout the year, all I've got to do is multiply it by 12 months, isn't it, to get the total income. And the agents have charged us a fee, so they're charging us 4% of the rent. And we've also got some repairs that have been carried out costing £660. So all of those will be allowable, won't they? The capital costs are not allowable, but any repairs and maintenance, as long as it's just to keep the property running and it's not a repair to get it into a usable state, will be allowed. For our second property then, we let this also throughout the year, so that's another straightforward one. We just need to multiply it by the 12 months to get our income. And for this one, Darren has got a mortgage on the property and he paid some loan interest. Now, I don't know if you remember doing this, but when you've got a mortgage on a property, if you lend some money to be able to buy something to rent out, in the current tax year, remember I'm using current tax year rules, you are only able to claim that as an expense at 25%. The other 75% of the expenses we will claim as a tax reducer, and we'll deal with that when we actually come to do the tax computation. And then the third property, he bought the house in May 2007, he's received rental income of £750 a month up to November. So he hasn't rented this one out for the whole of the year. So what we've got is he's rented it from the 1st of April through to the 30th of November 18. Remember, we always just take the full month of April, even though the tax year starts on the 6th, because we don't want to mess about calculating days. It just gets very messy. So he's actually rented the property out there for 8 months when we come to work out the income. All right, and there's no expenses on that one, so it's fairly straightforward. Now, the last thing it mentions that Darren's got is he lets out a furnished room in his own home. So I don't know if you remember this rent-a-room relief. And if we look at what he's doing, if he does it throughout the year, so 12 months worth of 450, okay, if we multiply that through, gives me 5,400. And that means that it's less than the threshold so therefore is exempt. So remember, with rent a room, you've got that test, haven't you, where you can either tax the excess above the threshold, or you can just claim it as a normal property with expenses. But if his income's below the threshold, then we might as well just say it's all exempt, and it keeps it nice and simple. Now that's all the information that we need for part A of the question. Here is about his additional income, and we're going to need that for when we come to answer part B. So we're going to forget about that at the moment, and we're going to focus on this part A calculation. So I'm just going to move to the side here so we can look at our three properties. So we've got 27 Moorland Drive first of all. That's property number 1. And as we saw, we got £900 a month. So that's his rent. £900 times 12 gives me 10,800. And then his expenses, he's got 4% of that rental income. So this is this here. He has a collection fee, so he's charged that 4% of his income, which is 432. And then he's also got those repairs in that property that he's allowed to claim for, which is 660. So in total, his income will be 9,708. Moving on to the second property then, we've got 33 Green Avenue, I should say. Have a look here. Now this one, his rent was £1,200 a month for 12 months. That gives him 14,400. And then for his expenses, this is the one where he got his mortgage interest of 2,000, but he could only claim under property income 25% relief. So I just want to be clear here. I'm applying the 25%, which is the rules that you've been taught by your tax lecturers, because those are the rules that you're being tested on for the current year. So don't worry too much about the dates. I know it was different in different years. I just want you to know how to do the current year rules. So he can claim £500 on that, and that will give him property income to be taxed on of 13,900. And the third property then we've got is 59 Argyle Street, with the rental income here. This is the one where he only rented it out until November. So from the beginning of the tax year to November, he rents it out 800 months at £750 a month. And he's got no expenses on that one, so that's all we've got to put in. Now don't forget that in your exam, if anything is exempt, you must say it. So I'm going to just write down here, rent a room, and I'm just going to write next to it the word exempt. You don't need to explain why it's exempt, but you just need to say that you've looked at it and you've recognised it. So you could either put a 0 there or just write the word exempt, it doesn't matter. So add that all together then, and you should find that your total property income, which is what you want to answer your question, is 29,608.